I was 11 years old when I bought my first stock. Sounds impressive, doesn't it? But I'll be honest, at that time, I had no idea what I was doing. I thought I understood the market, but I was just playing a guessing game. I spent hours looking at charts, trying to find patterns that, in my mind, would turn me into the next investment genius. It was fun, but let me tell you a secret. It didn't yield any results. None. It only showed me how much I didn't know. For years, I devoured every book I could find on the subject. I was that kid sitting in the public library, trying to learn everything I could. But do you know what happened? I read, and remained lost. I was looking for answers in the wrong places, like many people do. It was as if I was in the dark, trying to find a light switch. Until one day, at 19, I picked up a book that changed my life. The Intelligent Investor by Benjamin Graham. And let me tell you, this book was a game changer. The message it brought wasn't complex, but it was powerful. And sometimes that's what we need, right? Simplicity, clarity, something that makes you think, how did I not realize this before? And that's exactly what happened to me. 3 ideas from that book became the foundation of everything I do to this day. Let me share them with you. The first idea is simple. A stock is a part of a business. That's it. When you buy a stock, you're buying a piece of a real company with real people, products, customers, and challenges. It seems obvious, but I'll tell you, most people forget this. They look at a stock as just a number flashing on a screen. They forget that behind that symbol is a company that needs to be analyzed. When I was younger, I knew the ticker symbols of almost every company on the New York Stock Exchange by heart. I could recite them to you, but I had no idea what those companies did. It was only when I started looking at them as real businesses that things changed for me. Now, let me tell you about the second idea, which is one of the most brilliant I've ever heard. Graham describes the market as if it were a person. He calls it Mr. Market. And Mr. Market is a bit crazy. He shows up every day to tell you how much he wants to buy or sell your stocks for. Some days he's ecstatic and offers an absurd price. On others, he's depressed and barely gives you a dime. But here's the trick. You don't have to trade with him every day. You only need to act when he's offering you something truly worthwhile. This idea liberated. It made me understand that the market isn't there to command me, but to serve me. And let me ask, how many times have you seen someone panic because stocks fell? Or get super excited because they rose? That's reacting to Mr. Market as if he were your boss. And that's not how it works. You are the one who decides. You choose the right moment to act. And often, the right moment is to do nothing. The third idea is the most practical of all. Margin of safety. This is essential. It's like driving a 9,800-kilogram truck and coming across a bridge that supports 10,000. Would you cross it? I wouldn't, because the risk is enormous, and that's what the margin of safety gives you, protection. You only invest when there's a big enough cushion to ensure that even if things go wrong, you're protected. These 3 ideas, looking at stocks as businesses, ignoring the market's craziness, and always seeking a margin of safety, are the heart of good investing. There's no secret beyond that. And you know what? It's so simple that many people ignore it. They want something more sophisticated, more flashy. But the truth is, good investing doesn't have to be complicated. It just needs to be logical. Now, let me bring this to our reality. Why do people complicate things so much? Because they get carried away. When you understand that the market is not the enemy, but a tool, everything changes. The problem is that many people look at the screen, see the price going up or down, and think they need to act, but they don't. Do you know what your true advantage as an investor is? It's patience. It's the ability to wait until the right opportunity appears. And here's what I want you to take away today. You don't need to be a genius to succeed in investing. You just need to follow these simple ideas. Understand the business. Ignore the noise. Protect yourself against risks. That's it. The rest is just noise. Now, let me take you deeper into this, because when I started to understand these principles, everything became clearer. But there was still one detail I needed to get right. the type of business I wanted to invest in. And do you know what that taught me? That choosing a good business is like choosing a castle to defend. Think about it. In the business world, every castle attracts attacks. Every profitable business will have someone trying to take it down, copy its idea, or steal its customers. It's capitalism at work. So, the question you have to ask yourself is, does this castle have a moat? Because the moat is what protects the castle. It's the competitive advantage that prevents your competitors from taking your place. If you're going to invest in a business, it needs a big and strong moat, something that differentiates and protects it. It could be a powerful brand, like Coca-Cola. It could be a patent, like those that protect pharmaceutical companies, or it could be a strategic location, something no one else can replicate. Want a practical example? Think of Coca-Cola. 6 billion people in the world know this brand. And it's not just knowing, it's associating the brand with something positive. Coca-Cola has managed to connect with moments of happiness, parties, family gatherings, sports events. They've created an emotional connection with the public. And that's a gigantic moat. Even if another company tries to make a cheaper soda or invests millions in marketing, it's unlikely to achieve the same space in people's minds and hearts. And here's something interesting. Businesses with large and deep moats are so solid that they can even survive poor management. I remember something Peter Lynch once said, "Buy businesses so good that even an idiot can run them, because eventually, one will." Makes sense, doesn't it? When the business is really strong, it withstands the ups and downs, even if the leadership isn't the best. Of course, the ideal is to have honest and competent management, but if the moat is big enough, the business stands firm. Now, let me take a quick pause. I want you to imagine that suddenly, someone gives you $1 million, and you have a week to choose 3 businesses to buy. It can't be just any business. You can only choose those you will keep forever. What would you do? How would you decide? I'll tell you what I would do. I would spend the entire week studying, looking at companies, analyzing their advantages, evaluating their leadership. I would discard everything that doesn't seem strong enough or doesn't have a clear moat. Because, you see, in the business world, the secret is not to make many bets, it's to make the right bets. And if you can only choose 3, you need to be absolutely sure they are solid and enduring. And here comes another important thing: the price. It's no use finding a great business if you pay too much for it. Because, in the end, what defines your profit is the difference between the real value of the business and the price you paid. That's why I say, only buy when the price makes sense. Wait, be patient. Opportunities appear, but only for those willing to wait. You know, I see a lot of people obsessed with trying to predict the future of the market. It's like trying to guess the weather 3 months from now. Useless. Instead, I focus on what I can see and understand today. How is the business? Is it strong? Does it have a moat? Is it well managed? And, most importantly, is it at a fair price? If the answers are yes, I go in. If not, I pass. And let me tell you something that changed my way of investing. I realized that sometimes the price can influence your opinion. That's why, when I analyze a company, I prefer to do it without looking at the stock price. I take the reports, study the numbers, evaluate the business. Only then do I look at the price. Because if you start with the price, it's easy to be influenced and lose focus on what really matters: the value. This approach reminds me of something I did when I was a kid. I loved horse racing, not because I bet, I was just a kid, but because I liked studying the statistic. Before looking at the odds, I analyzed each horse's performance. Then, I compared it with the chances the market gave each one. The stock market is exactly like that. First, you evaluate the business. Then, you see if the price makes sense. Simple. And here's the last point for today. Your life as an investor doesn't need to be rushed. You don't need to make 1,000 choices. In fact, if you make about 5 good choices over your entire life, you can become very. A good investment is like a marriage. It's for life. Don't enter a relationship just because it seems exciting at the moment. Enter because you believe in the long term. And here's the big takeaway. Investing isn't about making many moves. It's about making the right move. You don't need to get it right every time. You just need to get it right where it counts. That's why I say, if you have 5 good ideas throughout your life, you can become incredibly rich. Don't waste energy trying to grab every opportunity that comes your way. Focus on those that truly have potential and make sense in the long run. That's where the real secret lies. You need to be patient. You need to be disciplined. You need to understand that the market will throw a lot of things at you to distract you. But you don't need to fall into that game. What you really need is clarity. Clarity to know what to look for, and courage to act when the right opportunity appears. And remember, the market is not your master. It's your tool. You're not competing with it. You're using it to your advantage. So next time you feel that urge to follow the herd or react to what's in the headlines, stop and ask, does this really make sense? Or is it just another move I don't need to make? In the end, what matters is not how much you move, but how much you get right. Be strategic, be patient, and always keep in mind that investing is more about what you choose not to do than what you do.